We're going to be starting with trending pairs. We believe this week we have a breakout in the US Tech 100. We, of course, have a breakout in gold that we want to look at. We have a stronger dollar against the Swiss franc and a stronger dollar against the euro. So we want to long or short euro dollar, long dollar against Swiss franc, long Tech 100, long gold as usual. We also believe we have a breakout against the yen pairs. We would want to long sterling yen and dollar yen, but the sterling yen is performing much stronger than the dollar yen. All right, let's take this to. We've just been looking at steady, good, strong momentum on the 4 hours, on all the intermediate term frames, 1 hour, 45 minutes, 30 minutes. We also have a trigger on the 15 minutes, and now we can consider that definitely we have taken out and supported 192.50 at lost. This was, of course, a very strong resistance. We've taken out 192.50 this week. We should be looking to go, if we have a bullish Bank of England meeting, we're looking to go to 195.46. Remember, we just checked resistances on the hourly time frame, and resistance one comes in at 194. So 195, 195.46 are probably resistance two on the hourly time frame, which are the volatility levels that are expected this week. Let's take it to more detail. We're looking at this daily. Short while back, we did consider that we have taken out an internal level one, supported on it, and therefore we really are going to the neckline. Sorry, we really are going to the moving average, and of course, internal level one here. Maybe we don't get 195.40. 95.46 is showing here. We just go to level one, but presumably we're going to be seeing 195. This is a delayed 4 hours. We've been looking at it since last week. 195 and 196 are the upper boundary of a leading diagonal, which the market is moving. We are really looking at, assuming it's not showing here, but I believe it's showing on the hourly. So we are looking at this junction. Showing on the daily. I'm very sorry, showing on the daily. We're really looking at this junction. This is where the market is going. Now in more detail on the 4 hour charts. There has been a retraction all the way to 190.30s, and now we have bounced. The first level is to take out 193. We did test 193 earlier. Today, I believe we are retesting 193. So very likely we're going to take it out. Again, the most immediate target is 194, 194.37 shows here. Either we do double shoulders or we do a higher head. Even if we were to do a higher head, we're not going to buy and hold until we get the higher head. Almost very difficult, almost impossible, and therefore we'll of course stick with taking it to the shoulder levels. Maximum is really 194.40 this week, 196. This is today's 4 hours. It shows we have broken out of the leading diagonal. Right. So the last time we attempted to break out of the leading diagonal, there was very strong momentum like we're having now, but the market did, of course, 197 and 198, and then crashed once we couldn't take out overbought level here on momentum. Today, it's different. We have taken out overbought level. We have triggers, or at least one trigger, and we can now consider that we are supported on the support here, showing, of course, an attempt to make a tweezer formation on top of the breakout of that leading diagonal. All right, so we're probably going to take out the neckline, support on top of it, and then move to 194.60, 194.40 is the next neckline of relevance. It's a level one. We're now definitely supported at level three. The last downtrend is showing here in red, the 1 and 2, 3, 4, and a 5. We had a very strong congestion on top of that level three. So it is believed it's just a matter of time to move to level one, and the fundamentals are there to take us there. This is today's 2 hours. We can see a trigger since early Asia time. And it's perceived the market is moving on this ending diagonal. This is an ending diagonal, yes. Target 194, 194 plus levels, 194.50s, 194.60s are just the beginning of the shoulder levels. In reality, we should be going to 195. We have taken out all the level 3 supports now because we are at 193. I'm referring to these. And when we're doing a monitor, seriously, when you are trading and doing a monitor, you want to distinguish the internal supports and resistances, how the market is performing at such junctions. Is it able to support on internal resistances? It's rejecting on a specific resistance. And when it retests that resistance, does it break lower to the next resistance or support and then becomes entrapped between lower resistances or not. From what we have been, of course, seeing right now, no further market has broken out above that resistance. And now we even did 193. So we've taken out all the internal level threes and level ones, which of course gives us bullish composure. 193 is the upper boundary of the ascending triangle. There's an ascending triangle here. We're right there. On positive momentum, we should attempt, of course, 194. That's our projection. This was our projection since last week. We did consider that we're going to be retracting even lower, but we didn't. And now we have lowered to test the wedge, but we didn't. We had that support on the wedge earlier. Market is really going to 194.10 here and 194.68 before we get another retraction attempt to do shoulders. We only focus, of course, on the most immediate move, which is to the upside, 194, 194.60. Takes us to today's 45 minutes. This is what we're really seeing. You want to get back to level C. That C, what does that C stand for? That C is really the C. Let's see here. So this market has done an A, B, and the C. It should be doing a new high if that is correct. If that is not correct, C is not finished. C drops back here. So that C is an A and an A, B, C into B, and then another A, B, C down into C. Can we do a new high? Fundamentally, I don't think so. But things may change. But anyway, we have the possibility that we're finished to complete correction ABC, and the market should be moving to do, at least long term, there's potential to see a new hit. What we believe is going to happen is that we still have consolidation. So C may be there, that's correct. We're going to get an A and a B and an A and a B before we get a C, and then you get an A, B, and C, and then a B, and then a C. A, B, and C into B, bigger B. Some people like to label it like this, but we would consider that the market is just gyrating and it is just an A, B oscillation, A, B oscillation, A, B oscillation. When there's a trend, that A breaks higher. Today, we are at the top of the cycle. This is the same lower boundary of that ascending triangle. This is the top of the cycle, 193. It's a leg A. We expect it to break higher. That's why we're only aiming for 194. If we see good positive momentum continuation, then we can take it to 195 and 196. But it's going to be a very slow trend, not that much volatility. On the daily, how can you tell? Because on the daily, we are negative. By the time we get to overbought level, we're going to be on the daily charts. We're going to be here at 194. So the most logic projection is just 194, 194.60, because the market is already topped out earlier at 193. So we're just moving something like 100 and let's say just 127.2% above the old market cycle high. The labels in that leg A are showing here in a 1 and a 2, a 3 and a 4. It's of course an ending diagonal, 3 in bracket, 4. We're just doing 5, and the internals of that 5 will get to show on the next chart, get to show on that 45 minutes. All right, so we get to 1 and a 2, we get a 3, we get to 4, we get an internal 1 and a 2, an internal 3, 4, and a 5. We've done something like a dot 1. A, B, and C will show on the next chart. That is our current breakout in leg A. Leg A presumably is 5 swings, 1, 2, 3, 4, and a 5 before we retract. Over here, we're showing that 5 swings will round up a 5 after doing 3 in bracket and 4 in bracket. We just get to do that 5 in bracket. Let's take a look at this on the next chart. It shows more detail, easy to absorb. So I'm focused now on the segregation of leg 1, 2, and breakout into 3 to create that 5. You're going to see that level 1, 2, 3, 4, and 5 in green. You can see them here 1 and 2, 3, 4, and 5. Finished leg 1. Right, so it could be 2A, 2B, and 2C, we believe. That's what has been going on. And suddenly the release of the retail says the market wanted to break out since early Asia, but there were no fundamentals, nothing to drive it higher. So I don't believe even retail sales is much of a stronger fundamental to drive the sterling yen higher or to drive the stock market higher. But the market has been very depressed with in terms of stocks, and therefore any good news or any interpretation of good news will take the market higher, and that's what we're seeing right now. So this is what we're trading. We take it live. We have 5 swings. Becomes a high degree leg 1, high degree leg 2. It really was a 2A, 2B, and 2C because we're seeing negative momentum here. On the trigger, we have finished 2C. We're doing a leg 1, and we're breaking out into leg 3 because this is a 1 and a 2 already. All right, let's take it now live. Asia time, there was potential still to move a bit lower, but this is now negated. Take it live then. I think we need to take out the resistances to declutter. I don't think we need this momentum at this point. I'll just highlight the labels that we believe we are trading, that we believe the market is moving into. Doesn't really, they are of course high degree labels, so they're important. All right, so we're going to be seeing that like 5. Uh, I don't think we need this. All right, so it looks like another ending diagonal rise, actually, to be frank. And we want to have this here. So this is going to be an ending diagonal inside of that ending diagonal. We had, of course, like 5 is going to be 5 swings. We had a 1 and a 2. We're doing a 3. I believe this is 1, and we have 2 all the way down here. The most important move is going to be 3. It's actually the only trending move. That's why it's very important to get into this move right now. This is really the only trending move. So, of course, this is 5 swings. Again, it's going to be 5 whites. 1, 2 in white, 3 in white, end of the story. And then a 4 and congestion and a 5 that will top out with 3. So, 3 in white is going to be composed of these green labels. All right, so 3 in white is going to be composed of these green labels. Let's have the 3 in white in place. All right, so, and that's it, 3. And we gets 1 and a 2 and 3. So, in order not to make confusion, I'm going to take this off. 1 and a 2, 3, 4, maybe 5. But I believe we're getting higher intentions, so we get an extension, maybe 3 plus 5. At least we have a 1 and a 2 at this point, and the market is just moving. Best entry is as close to the market as possible. Market is 193.06. We can get in at 192.90, 192.84, 192.80, 74. We can even go down here, 192.66. What will determine do we go down here or not? It depends on the micro micro momentum. If we're seeing negative momentum on the micro momentum, then we can, of course, consider that we are going to be seeing maybe 192.80. We may get some of these moves. Target. All right, so the best entries are 192.75, 192.80. We can just have a hedge at 192.20. That is all, just below internal level 1 and 2. So the hedge is below internal level 2, 192.20. We take the entry at 192.80. I think is the best. I think we can still get it. And we are going to be taking it to 194. 194.50 is also possible if we see good progression of positive momentum. If we see good progression of positive momentum, actually on the smaller frames like the 15 minutes. Resistance to today is 193.50. So probably by the end of the day, we're going to be there. Then we're going to retract to do that correction. Tomorrow, we may get 194.30, resistance 3. Targets, of course, this week are resistance 1 on the hourly, probably 194. Can we get resistance 2 on the hourly? Technically possible, 195.70, 195.50. But it depends really on the meeting by the Bank of England, how hawkish that is. And of course, how dovish the Bank of Japan also is. It's possible. It's possible. But a bird in your hand is better than 10 on the tree, like the saying goes. So if we are at 194.20, for example, before the meeting by the Bank of Japan, I would just consider to close out, take in the money, and redo the entry. Because, of course, anything adverse will mean that we just lose our earnings.